Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Duggal, and these are our headlines this Wednesday afternoon. The Nifty consolidates around the 10,400 mark. Axis Bank and HDFC drop. Bosch and Coal India rally.
Bitcoin surpasses $10,000 for the first time at $167 billion in market value. The cryptocurrency is now more than 95% of S&P 500.
A market check by Bloomberg Quint throws up a surprising outcome. HUL, the country's largest consumer goods company, is yet to reduce prices on detergents and dishwashing soap despite a cut in GST rates.
Government says errors by exporters while filing returns is the sole reason for delay in grant of GST refunds. We'll get to all of that in a bit, but first the markets, it looks like a bit of consolidation that's going on. Neeraj is taking a closer look. Neeraj?
Yeah, you summed it up well. Even though there are big movers though in today's session, I must add. So if you look at the headline numbers, very flat. Headline for the broader markets as well, very, very flat. But look at individual movers, and I think there's a clutch of names moving on. I don't remember the last time I saw Bosch do what it is doing today. Up 5.5. Don't quite know what the reason could be. But it's a big price and volume action day for Bosch in the session today. 20,039. It's gained 1,000 points in today's trading session, so this is a big mover. That aside, you have a set of movers. So if the Nifty gainers and losers rates will come up on your screen, there are enough and more stocks which are moving up and down about 1%. Axis Bank, which has been gaining for the last few days, is a bit soft in trade today. There are a couple of others on the upside as well, right? But frankly, it's all about what's happening at the broader end of the spectrum. And again, there's a set of stocks which have been doing very well, which continue. So consumer durables and the likes of Crompton Greaves Consumer or Whirlpool, some big moves that are happening in those stocks. So the consumption related stocks doing okay. This is Crompton Greaves, but Crompton Greaves Consumer as well as Whirlpool are having a fairly decent session in the trade today. And then you move on to the 2 or 3 usual suspects in terms of pockets. So jewelry stocks, and I think I saw a couple of names, Renaissance and a couple of other small cap jewelry names doing well for themselves. Renaissance will come up on your screen. Titan marginally higher. Real estate and Sobha has had a really big day. They've announced a JV with Purvankara. It's probably a more stable name, Sobha, in the southern markets, and that stock is up about 10% in trade today. And software, Nucleus Software is up another 13%. Interestingly, this is one company that in India has a government approved cryptocurrency. That's interesting, and we'll try and get the management at some point of time over the next couple of days to talk about this. But Nucleus Software is up about 13.5% on fairly decent volumes as well. So the similar set of themes, just that the players are slightly different today.
All right, Neeraj, thanks for that. That's the market structure. But of course, we are at a point in time where we are starting to see a whole host of expectations come in for 2018. Global expectations, Sensex expectations. Morgan Stanley is the latest one. Neeraj just found his way to the wall to give us the Morgan Stanley view of the world in 2018.
Yeah, not a big walk, so it's fairly comfortable. But yeah, this is what we're trying to say. This is the equity strategy, remember, for Morgan Stanley, penned by Rhythm Desai and his team. And what they of course raised the target of the Sensex. So the previous target was 34,000. Now the current target is 35,700. And the reasons are the same. One, of course, they believe that in relative terms, India will do much better than the other EMs. In absolute terms, markets across the world and across the emerging market sphere will really not do too well. But on relative terms, India will outperform. There are some key risks and key catalysts. I'll get to that. But this is the main chart that you need to focus on. This is of course the Sensex trend. And they believe that the base case scenario for this market December 2018 could be this number, 35,700, which is a 6% upside from the current levels, which is a 50% probability. The bear case scenario has a 20% probability, the lowest probability, and if that pans out of a host of risks, which I'll get to, then the number could be about 25,000. The bull case scenario, subject to some key catalysts that work out, and again I'll get to them, then we could actually see a number of 41,500. Now, wouldn't the bulls love that? But whether that happens or not remains to be seen. But here are the key catalysts and the key risks that Morgan Stanley lays out in its note. So firstly, the catalysts and the growth drivers. So Morgan Stanley, and this is the Indian catalyst, they are talking about one, supportive global growth, which will aid the Indian growth. And let's move quickly on these. Two, they believe the improving capex cycle in India. aided, of course, by fiscal spending from the government side as well, and buoyant consumer demand. The Indian consumer stays put. That is one big growth driver. 2 or 3 risks they are speaking about. One is, of course, the big oil shock that can actually come in. So the supply shock to oil, which will be true for all economies and emerging economies. Potential job losses in small firms post the GST implementation and execution. And if the government retrospectively links Aadhaar to property, then the wealth effect that comes in might actually spoil the party. This is what they believe is the key risk to growth. Now let's move ahead and talk about 2 or 3 things: earnings, corporate fundamentals, and valuations. Firstly, corporate fundamentals. They believe the best corporate fundamentals that India has been in a while. Earnings revision breadth likely to be very, very positive after 7 years of being in the negative territory. Free cash flow likely to be strong, setting the stage for capex from private sector. And the return on equity cycle has taken an inflection upwards. And they have given some charts to speak about these as well, if I can get those charts. One is the free cash flow, and if you see that it's been trending upwards for all key indices. So BSE 500 companies, ex-financials and energy, you slice and dice whichever way, there's a bit of an uptick that has happened in free cash flow. And similarly, after a downtrend for a number of years, ROE has started to pick up. That's the next chart, and that will come up on your screen, and you will see the ROE trend after falling for a number of years has just started to inch up according to in the Morgan Stanley universe. So that's something that they believe is a positive as well. They're very bullish on earnings. The next set of graphics will come up on your screen, and on valuations. They believe valuations are relative to EMs are below average, and that gives them comfort. And markets, according to them, are not pricing in a multi-year growth cycle. That is the key assumption of Morgan Stanley. FY18, 12% earnings. FY19, FY20, 23% earnings. The only thing that they're asking people to watch out for is that usually election calendars, heavy election calendars, are source of extreme volatility, and we are entering into a busy election season with December, March, and May. So that is something that investors need to watch out for.
Yes, thanks so much for that. That's Morgan Stanley's view of India, the world, and we've been getting a whole host of these 2018 forecasts. I think what has underpinned a lot of them is the expectation that the global economy will remain strong in 2018, so you may not see major disruptions coming in from there. And then the second part of that forecast is the expectation that the disruptions that you have seen in India will start to play themselves out, whether it's the GST disruption or it is the demonetization disruption. And those targets, as Neeraj said on the screen, the bull case, the bear case for the Sensex. Now, if you're talking about targets, there is one market which has outstripped any target you could put on it. And that, of course, is the Bitcoin story that continues to play out. The meteoric rise continues, $10,000 mark taken out. Harsha has been focusing on this story. It's one of his favorite stories of the year for sure. And now it's Harsha on the wall. Harsha, what now?
It's undoubtedly one of my favorite stories of the year. This is absolutely fascinating because, I mean, I've run out of adjectives to explain this meteoric rise. Just one chart first to explain what's really going on. Headline, crossed $10,000. The yellow line is when it took out 7,000, and this is just the chart for this month alone.
Oh,
so it
I thought
took
it was a year
out
chart.
Yeah, it took out 7,000 closed on 6th of November. From 6th of November to today, it's moved about $3,300, $2,000 in 4 trading sessions alone. That's the story. As far, again, we've taken out about $150 billion in market cap. These numbers are well known. But what's interesting, and if I can bring up the year-to-date chart, just to give you a sense of the wild ride that Bitcoin has gone through, Ira, in the past 5-6 months. 3 times this year, you've had a 25% plus drop in the value of the Bitcoin. First was in the month of July, when there was a split within the fraternity of Bitcoin supporters because there was a disagreement over the technology upgrade that led to a 25% plus fall in the value. And again, in September, you had China cracking down on Bitcoin, on digital currencies, and led to another 25% plus fall in the value of the Bitcoin. And as early as this month, or as early as early November, There was another fall of about 25% plus in the value of Bitcoin, merely because the technology, a promised technology upgrade was cancelled. And lo and behold, you've had a rally coming back again. It's up about $10,000. Now, here is the interesting one. If you notice, the reactions that have come all this while of the guys who are supporting Bitcoin are all technology guys.
Yes.
It's all coming from the valley. The guys who are opposing it are all the financial market participants. Again, we've spoken about this before. The philosophical debate is that this is a romantic libertarian idea that Bitcoin cannot be regulated or controlled by one group of people or one power. And the contrary is the financial markets, which is a regulated control. So here's where Bitcoin finds itself. The dilemma is this: either it turns left and continues being this free-spirited teeny bopper, wearing a t-shirt and jeans and high on dope, or it takes a right turn and wears a three-piece suit and does serious business with Wall Street. That's where it is.
That's a fabulous way of putting it, a romantic libertarian idea. Of course, as Harsha said, the comments coming in on the Bitcoin have differed sharply. The latest one overnight came in from Jack Bogle, and he said that Bitcoin has no underlying rate of return. Bonds have an interest coupon, stocks have earnings and dividends, gold is nothing. There is nothing to support Bitcoin except the hope that you will sell it to someone for more than you paid for it, the greater fool theory, so to speak. That's Jack Bogle, who's adding to the plethora of voices, divided voices, Harsha, on this story.
Interesting. Let's get another voice in. Eric Lam from Hong Kong joins us. He's been reporting quite a bit on the Bitcoin. Eric, thank you so much for joining us. What are Bitcoin watchers saying after this is taken out 10,000?
Well, it's funny what you were talking about, describing the two different directions that Bitcoin is facing right now, because I was just talking to a Bitcoin watcher. He's the CEO of BitMEX, a derivatives outfit in Hong Kong, and he was attending a conference in New York today where he said that, contrary to maybe what they might have expected at past conferences, the number of people wearing three-piece suits vastly outnumbered the people wearing jeans and hoodies at that event. And he said is a little bit of people have maybe poo-pooed Bitcoin for a long time and finally decided to jump in. They just can't hold their noses any longer.
Okay, so that's a valid point, really. So is the difference of opinion over technology upgrades, is that subsiding a bit? What are you hearing?
Yeah, I think so. There's a little bit of a sense of a calming of the waters after the disruption that you mentioned in early November, where we did see that the upgrades that they were talking about with the main Bitcoin, those just didn't come to pass. But after the price drop, it really seems like things have calmed down a bit. And as one person we spoke with today said that there's a sense of stability now in the market, that you are getting back to predictable growth for Bitcoin, which I guess may be kind of funny to even think of that itself, given how fast Bitcoin is appreciated.
Just one thing from my end as well, Eric. We have seen that the CME announced the futures trading to start sometime later this year, or perhaps early next year. Does that bring a sense of credibility to this as an asset class?
Yeah, I think so. I think that one of the themes this year for Bitcoin throughout the year really has been really pushing the conversation on cryptocurrencies into the mainstream. And we've been seeing this throughout the year as more and more central banks have weighed in on what the future for digital currencies holds, and the future of Bitcoin. In particular, a CME Group starting off saying that they were not interested in cryptocurrencies, and then turning around within a pretty short period of time and saying, actually, we are going to offer Bitcoin futures, and before the end of the year even. I think a lot of watchers and investors in the market now are waiting for this to happen before the end of the year, because it gives it a certain amount of legitimacy now that CME is entering the market. And then you also have firms like Goldman Sachs has talked about working with other investors and other companies in exploring ways to invest in Bitcoin. So this really was a year where financial institutions, mainstream financial institutions, have entered the conversation, partly because they have to. It's just getting too big to ignore.
Eric, a question from my end. Are people in the Bitcoin space, both the guys in the suits and the guys in the jeans, a little bit surprised that central banks haven't been stronger or haven't come in with stronger commentary on this Bitcoin issue? I mean, I know they've all said, this is not a currency, it's not backed by us, etc. But they've allowed this run to continue. We haven't heard any strong comments from any large central bank.
Well, I think that's we have seen some strong comments from places like China, where as you mentioned in September, China cracked down on digital currencies. But I think that for most central banks, there's kind of two things going on at the same time, which is one is a conversation about the future of existing cryptocurrencies and private currencies like Bitcoin. And then on the other hand, the future of the technology, the blockchain technology that underlies digital currencies. Because I think most central banks see some value in that technology in the progression of society towards a cashless future. And I think that's why you're seeing pretty much every central bank in the world has started to do some kind of work and in varying stages of progression, looking into how to best adapt or how to best implement using possibly digital currencies or the technology for digital currencies at some point for themselves. Whether they are actually going to do it or not, obviously is still a very big question, but it's definitely on central banks' radar at this point.
Eric Lam, many thanks, Eric, for joining us with those views. That's Eric Lam joining us, Bloomberg News, joining us from our studios in Hong Kong.
Harsha, I just have one small input into this. As we've been hearing this whole story, reminder back to the 1930s and that famous quote from Joe Kennedy, right? Everybody asked him how he managed to avoid the crash of 1929, and he said, in paraphrase terms, when the shoeshine boy gets in, Joe Kennedy gets out. When the shoeshine boys have tips, the stock market is too popular for its own good. Joe Kennedy is reported to have said, but you got to sort of draw some parallel, perhaps.
But this quote holds good for the stock market even today. Whether it holds good for for Bitcoin or not.
All right, that's the big Bitcoin story, and we'll continue to track it. No option. But let's move on to another story which has remained alive through this year, and that is the story of bad loans and corporate debt. Well, lenders now have enough tools to deal with the NPA mess. That's the word coming in from Chanda Kochhar, the CEO of ICICI Bank, the second largest private bank in the country, speaking to Tamanna Inamdar on the sidelines of the Global Entrepreneurship Summit in Hyderabad. Chanda Kochhar said that it is important for banks to find a buyer while the asset is still in running condition. That, of course, comment came in response to a query as to whether keeping promoters out of the insolvency process is a good thing or a bad thing. But let's hear out of full comments to see what nuance she took on that development.
When you talk of NPAs and stressed assets, we must remember that there are 2 or 3 parts to it. One is about recognition of NPA, the other is about resolution and then recovery. I think as far as recognition is concerned, the country has come a long way. A lot of the stressed assets have already been recognized as NPA. And while I'm not saying that there will not be new NPAs as we go along, but if you look at the banking sector, the additions to NPA, even say, for a bank like us and in general, the additions to NPA, the rate of additions has been coming down in the last few quarters. But I think what is more important is to focus on resolution so that we get the right recovery in the most productive manner out of those assets. And there again, a lot of the enablers have been put in place. To start with, it was the various RBI schemes of enabling change in management, doing deep restructuring and so on. And then now the latest thing about the bankruptcy code, about the NCLT, which actually would enable that decisions are taken on time, that the decisions have a judicial cover, so the banks are also, enabled in their mindset to take decisions. So I think things are moving in the right direction. Well, we do have a lot of work to do in ensuring that the resolutions happen on time, that the banks take decisions on time, and that we resolve assets while they are working productive assets. Absolutely. And not lose value.
So do you think it's a good idea to keep the promoters out?
Well, I think, it's about saying that, is it a big deterrent for future companies to become NPAs? I think it's a big deterrent in that sense, to allow companies to become NPAs going forward.
Just one last question. The GDP numbers are expected sometime this week. Do you have any view on whether we will see an uptick, the worst of GST, etc. is over?
Well, I think, I'm not commenting really on the number. The number will be out. But what I'm seeing is that a lot of the high frequency indicators are showing an uptick. So you saw that Exports, September, October actually showed a much bigger improvement. Things like commercial vehicles, which were in the negative territory beginning of the year, are actually now in the good positive territory. Vehicle sales continue to do okay. The IIP is also showing now an improvement compared to the past. So I think there are a lot of those positive impacts. The government spends on roads and railways is actually creating a multiplier impact. And as you see some of the bigger things like affordable housing, those projects picking up, I think these projects also create a huge amount of multiplier impact. So without talking of the specific number, I would say that, a lot of the things are moving in the positive direction.
All right, we get you a whole lot more from the Global Entrepreneurship Summit, including an interview with Sherry Blair later on the show.
All right, but getting back to that banking bad loan problem, the actual genesis of it, of course, lies in corporate credit quality in India. And we all know the problems that India has faced in terms of corporate credit quality over the last few years or so. Moody's today came out with a report pointing out that China and India continue to be exposed to high corporate leverage. This first chart tells you how India stacks up vis-a-vis other Asian economies in terms of corporate credit. It's actually interesting because there are some indicators where India is not doing well, but others where India is better off compared to the other economies. So, for instance, if you look at the corporate credit to GDP number, India's number at 47% is much lower than some of the other peer economies in Asia. Also, over a 3-year period, that number has decreased for India. Perhaps where India does not fare particularly well is in the debt at risk segment. That is, companies with interest coverage ratio of less than 1. There, India has a proportion of 17%, second only from what I can see to Indonesia. That's the first chart. The second chart I want to point out is the household credit chart. That has remained a strength for India for a very long time. And on that metric, India continues to be very safe. Household credit as a percentage of GDP is at 10%, amongst the lowest, barring Philippines. Let's get a view in from Moody's. Alka is joining us on the phone line. She's a vice president of the Financial Institutions Group at Moody's Investor Services. Sorry, she's joining us live, not on the phone line. Alka, thanks so much for taking the time to speak to us. Appreciate it. I want to start with that first chart on corporate credit and various indicators there. So if you look at India vis-a-vis some of the other countries, we don't actually stack up that badly. Yet your view is that we are among the 2 countries which are at highest risk from corporate credit or quality of corporate credit. Can you explain that?
Sure. So in this report, some of the key messages that we have passed is the fact that the buildup in leverage has started to slow down across the region. Having said that, elevated leverage in some countries, and you pointed out some of the names like China and India, do pose downside risk. And when it comes to leverage, we split into 2 parts. So one is corporate leverage, where actually the amount of corporate leverage in India is not very high, but the amount of debt at risk is very high in India. And corporate leverage is concentrated in the hands of a few corporates, which is causing much of the risk. And finally, when it comes to household leverage, India is at the early stages of penetration on the household front, so where we don't really see much risk in terms of the household leverage.
All right. Alka, so, you have acknowledged that there has been a reduction over the last 3 years or so in India in terms of corporate leverage. What is your sense that, it is coming in from across the board? Are the companies and the groups that needed to deleverage most urgently, have they made the kind of progress that you would have wanted them to?
Sure. So the buildup in leverage has slowed down, which means that, in fact, the buildup in leverage in India happened in a period of after the global financial crisis, 2008 to 2012 and 13. And after that, actually, new investments, new projects have consistently slowed down. And hence, we are seeing that buildup in leverage has slowed down. But much work needs to be done to resolve what is existing with those corporates, and especially where the buildup has been much faster and their earnings capacity do not justify that level of leverage. So that's where all these NPA resolution or all these processes that are currently ongoing may probably ultimately help in improving the quality of corporate credit for the Indian banking system.
Alka, just one question about that, about corporate credit as well. When you talk about vulnerabilities in the corporate sector, you mentioned that China and India are among top of the list if you look at it from a pan-Asia perspective. Specifically with respect to India, given the kind of measures that have been taken, are you seeing the vulnerability reducing in the last 12 months or so?
So from a vulnerability perspective, we don't see that corporate leverage is increasing. So that is one good thing. But when it comes to vulnerability, it's really the downside risk that corporate credit is causing for the Indian banks. Again, from those perspective as well, we are seeing that there is some improvement. So when we look at, say, the overall corporate leverage, the metric has come down, or even the metric you talked about, the debt at risk, where we look at corporates with very low interest coverage ratio. We have some statistics which show that corporates with low interest coverage ratio of, say, less than 2 times was as high as 55 to 57% 2 years ago, but that has come down to about 45% in this year. So from a vulnerability perspective, it is gradually coming down. Having said that, the pot of perhaps stress corporate still remains high, and that's where some more work needs to be done.
Alka, I know you may not have looked at this aspect as part of the current report, but what's your sense as to whether this leverage issue will continue to impinge on private investment? The one issue is, like you said, a lot of companies have relatively low interest coverage ratios. The other issue is being brought up that the companies, the groups that were at the forefront of investment at the last cycle are the ones who are most leveraged. So we don't know where the new investments will come from. Any thoughts on those aspects? Because we're hoping to get into a new investment cycle at some point.
Sure. Yeah, so indeed, I think we talk about the slowdown in GDP growth, slowdown in economic growth, and private investment is not really taking place. And in fact, based on our assessment, we don't really expect a significant uptick in private investment in the next 12 to 18 months. So even though I look at the banking sector, for the banking sector as a whole, we don't really expect that credit growth will significantly accelerate. So until this leverage issue is resolved, we don't see that the situation is going to change, at least on the private investment front.
The other point that you make is that while indebtedness among corporate borrowers is high, the number of large borrowers are very few in number. Can you explain what you mean by that? Are you inferring that the problem is not as big as it is made out to be?
Sure, no. I think the point we're making is that the debt is highly concentrated. And when the debt is concentrated, it causes volatility on both sides very quickly. So again, I think in India, we know some of the statistics. The 12 largest borrowers account for 25% of the system's problem loans. So as such metrics do indicate that the problem is highly concentrated, and this issue first needs to be resolved before actually we can see some improvements in the credit quality for the banking system.
Alka, quick question on the often ignored aspect of household finance. So I think that continues to be a big strength for the Indian economy. The metrics that you put out suggest that in terms of household debt, we are still very, very comfortable and well below other Asian nations.
Sure. Yeah, I think on the household front, the penetration of credit, consumer credit as a percentage of GDP is one of the lowest in this part of the world. But at the same time, there are few other metrics. I think our chart also shows the fact that per capita GDP in India is one of the lowest in the region as well. So while penetration of credit is low, also the capacity of people to take up credit is low, especially when we look across the whole region. Having said that, clearly, even when we look at the quality of retail loans for the banks, the quality of retail loans is pretty good, and banks are going through a very good cycle on that front. Having said that, we are starting to get a bit mindful about the pace of growth in that sector, where perhaps some of the growth, much of the growth is coming from the mortgage loans, which are largely collateralized, but some growth is also coming from segments which are beyond mortgage, so maybe unsecured loans, where we do see that the amount of credit flowing is significantly higher than in the past few years.
I have one final question, Alka, and this is interesting. You actually say that as far as property markets are concerned, India's had the sharpest appreciation if you look at it from an Asia perspective. Can you elaborate on that too?
Sure. Yeah, so I think from a property market pricing perspective, you see this chart which shows that property market prices have appreciated the highest in India. Having said that, this is one big metric for the whole country, and I think if we look at, if we split it into further more regions, we can say that perhaps property market is overheated in some pockets, but broadly is largely stable. So maybe more tier 2 cities, which is where more property development is taking place, Having said that, but there are some pockets, perhaps in the NCR region, some luxury property market in big tier one cities where we are seeing overcapacity and where there are some concerns.
Alka, we leave it there. Thank you so much indeed for joining us. Alka Anbaris is joining us from Moody's, talking about what India's problems are with respect, if you look at it from an Asia perspective. Well, some of it is okay, but some of it we're not doing bad at all.
Yeah, absolutely.
Okay, one of the most important consideration in the implementation of GST has been to ensure the companies pass on the benefits of lower taxes to the end consumer. The soon-to-be established anti-profiteering body is tasked to do with exactly this measure. However, Bloomberg Quint has learned that Hindustan Unilever is yet to pass on lower taxes in two categories, detergents and dishwashing soaps. These two categories had seen GST rates being cut from 28% to 18% on the 10th of November. Again, in Hindustan Unilever as an example to illustrate what is going on in the marketplace. Charlene is standing by to explain to us what's going on. Charlene.
Yeah, Harsha, it's not just on detergents and dishwash, but also on skincare and shampoos. In fact, on none of the products that the taxes have been lowered, HUL has passed on the benefits so far. Although they've said that they've brought it down on coffee, on Brew Gold by, they've already brought down the tax rate on that, and also on Fair and Lovely. But, when I did a retail check yesterday across general trade and at mom and pop stores, we found out that, in fact, not just HUL, none of the companies have passed on the benefit to the company. None of the retailers were, in fact, even informed by these companies that they have to pass on the lower benefits. Now, when we contacted HUL said that it will take a couple of weeks for the new stock to actually reach the supply chain. And they've already informed modern trade. In fact, when I went to the modern trade outlets, that is Reliance, and also to Big Bazaar, there have been discounts actually on detergents, shampoos, and right up till 10% on these products.
Charlene, explain this a little bit further to us. Explain the story and why this is important. What are the issues that could be faced by companies in passing it on immediately? Is it that there have been frequent changes, they have to change the stickers, etc.? Is it that they had adjusted prices earlier? Can you explain the dynamics at play there? What all is going on?
So actually what happens is once the stock leaves the manufacturer and once it reaches the distributor, HUL had asked its distributors to pass on the benefits, asked the distributors to tell the retailers to pass on the benefits to the consumer. But that clearly hasn't happened because none of the retailers were aware of it. Now, at least with modern trade, they were able to do so, and that is what happened. But with the retail trade, even what experts tell us is that it's not possible that the supply which is in the chain right now, that can be changed, and also these retailers and even the distributors have already paid 28% tax. What retailers say is, how can we charge the consumer anything less than the MRP when we ourselves have already paid that amount?
I have one quick question to Charlene. Are you seeing higher discounting in this period?
Not at the general trade, but as in not at mom and pop stores. But if you go to your hypermarkets, definitely there is discounting. There were banners put up at Reliance Smart saying that they are passing on the GST rates. But when I built some products on shampoos, it was barely only 2% lower than the actual MRP. But on chocolates and on skincare products like lotion, till 10% was passed down to the consumer.
Okay, Charlene, thanks so much for that. You can get greater detail on that story on BloombergQuint.com. We'll stay with the GST story, though. Exporters have been complaining of stretched finances as the government has still not granted refunds of input credit. The Finance Ministry today hit back, saying errors while filing returns are the reason for most of these delays. Nikunj is joining us with details on this. Nikunj, what have they said? What are the numbers they're putting out?
Right. The refunds claimed by exporters for IGST paid during July to October is to the tune of 6,500 crore rupees, the government has said in a release. The government has also said that quantum of refunds of unutilized credit on inputs is around 30 crore rupees. Remember, there were reports that earlier said that around 50,000 crore is the quantum of refund and input tax credit that is pending to be released to to exporters by the government. Now the government has come up with a new figure which says that only 6,500 crore rupees is pending as refunds to the exporters. And the reason that they've given is for a slow release of refunds to exporters is that there were several errors made by exporters while claiming these returns, while claiming these refunds and input credit. And some of these errors made by the exporters were mentioning wrong shipping numbers and mismatch in invoices, and in some cases exporters had mentioned wrong bank account details. So that has led to a delay, or in some cases even rejection of refunds to these exporters. Now the government has advised all these exporters to fill certain sections of the returns again, so that they can claim the refunds and credit, and the government can release these refunds and credit as soon as possible. Over to you.
Nikunj, thank you so much for that. Nikunj Johri talking about the GST there. Let's move on now. We slip on a short break. On the other side, North Korea says it's now able to strike the US mainland with its new ballistic missile.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Welcome back. You're watching Power Lunch. Let's take a look at the headlines at the half hour. Quiet trade on Dalal Street as the Sensex and the Nifty clock in minor gains while banks trade flat.
ICICI Bank's Chanda Kochar says the onus is now on the lenders to find a resolution to the NPA menace as soon as possible.
U.S. Federal Reserve Chair nominee Jerome Powell tells the U.S. Senate Banking Committee that a case for raising interest rates in December is quote-unquote coming together.
North Korea claims to have successfully tested a new type of ballistic missile which is capable of striking the US mainland.
All right, markets, how they're looking at the half hour. Pradeep is joining us. Pradeep, flat at the index, but enough stock movers?
Yeah, definitely. In fact, it's quite a boring expiry, so to say, because, this is expiry week and we haven't really seen a lot of volatility, which is usual. Sometimes it does happen that most of the adjustment is done on Wednesday, therefore Thursday is quiet. But look at it. Even today, there is hardly any action. And looks like we'll see the expiry between 10,350, 10,400, 1020 points here and there could be possible. But if you look at stocks, definitely there is a lot of action. Although Nifty Bank has just slipped into red, but some of the banking stocks like HDFC, Axis Bank have been kind of dragging the Nifty down as well. So there is some pressure coming there. But on the other hand, you have these mid caps like Shriram Transport Finance or a South Indian Bank, which is doing quite well, moving up with good volumes. There is a report favoring fertilizer companies today from an FII broker. And in fact, Madras Fertilizer is a stock which has moved up on this news. Also, you have some of the smaller names like Kanoria Chemical. So actually, traders are hunting for these stocks that haven't moved, haven't really participated in the run so far. And there is a lot of trade happening there. You have some mid mid-cap IT names like Hexaware, Nucleus Software also doing well. But there are some stocks which have really been strong for a while now, at least for the entire week or maybe a few weeks. Like you look at Graphite, HEG, back in favor once again. ADF Food is another name. You also have Rallis, Shankara, Gati. I think the second or third day for each of these stocks moving up with good volume, and there is no sign of any correction actually. Well, there is some correction in a stock like Steel Authority, but that is on the back of a block deal which has happened here. So that is an important point to note. And yes, some rotation is seen, and finally there is some correction in tea stocks or sugar and related stocks like Praj Industries. So there is some amount of churning happening even in the mid cap and small cap space.
Pradeep, thank you so much for that. Well, let's talk about what's going on globally. North Korea shattered a 2-month period of relative quiet. The Kim Jong-un regime fired a missile that put the entire United States in range. According to Japan, the intercontinental ballistic missile flew for 53 minutes on a lofted trajectory and may have reached an altitude of more than 4,000 kilometers. The missile landed in waters about 250 kilometers from its northwestern coast. In a statement this morning, the DPRK said it's completed its nuclear program. US President Donald Trump, who had previously threatened fire and fury against North Korea, had a measured response. He told reporters that they would take care of that situation if it arises, end of quote.
Global news continues. U.S. Federal Reserve Chair nominee Jerome Powell said a case for raising interest rates in December is coming together. Powell was testifying before the Senate Banking Committee. He said that the labor market was improving, but it was improving in a manner that the overheating concerns of the economy may be likely kept at bay. He also said that rates have some way further to go from here on.
All right, let's talk about what's going on in global markets. Craig Erlam, Senior Market Strategist at Onda, now joins us on the phone line from London. Craig, thank you so much for joining in. Let me begin by asking you about what the markets have, how the markets have reacted to the news coming in from North Korea. It seemed to have sort of dismissed it. Is there a cause of concern at all?
I think that's a consequence of the fact that we've seen this so many times before now. It's no longer shock news. It has been a couple of months since the last missile was launched, so it was always going to be interesting to see how the markets would react should another launch suggest we're seeing another heightening of tensions. But it seems that the markets are viewing it in much the same way that we were viewing the latter phase of the previous launches, and that's to say that nothing is likely to develop significantly from here. Should we see it, that of course, and we will start to see more of a reaction. But the way the markets have shrugged this off would suggest that they don't see this developing into anything more serious.
Craig, comments coming in from Jerome Powell also largely shrugged off the markets, but there wasn't anything very new. He seemed to stick to a script of a potential December rate hike from the Fed.
Yes, I think it's been clear for some time that Jerome Powell represents continuity for the Federal Reserve. He's long been an ally of Janet Yellen. He's long voted in very much the same manner. He seems to believe that a few more rate hikes is warranted and that the economy is on a good path. So I think what we're seeing is a clear evidence that what we're going to see from a Jerome Powell-led Federal Reserve is going to be very similar to that of Janet Yellen. The one area where he may differ is going to be on regulation, and we've seen already from him that he does favour lighter regulation, which is probably why Donald Trump has edged towards him in the first place.
The market seems to be focusing on the positives at this point in time, Craig, and there is still expectation of tax reforms in the United States. Is the risk appetite still extremely strong?
I'd say it's very strong. I wouldn't say extremely strong. We are seeing the equity markets stutter at times. We are still seeing record highs in the US, for example, but that did come following a brief period of about a month where we were seeing it fall a little bit short. I think there's a lot to be positive about, and I think that's important. I think the global economy is doing very well. I think we're seeing recoveries in certain areas which has surprised people. I don't think we were expecting such strong growth, for example, in the US. Earnings have been very strong, and that's always going to support the markets. And now we're seeing things like tax reform in the US making some progress. So I think there's plenty of reasons to be optimistic. But all you have to do is look at the price of gold, which remains elevated, to show that there's plenty of geopolitical risk bubbling away under the surface. And I think investors are going to remain cautious about that.
All right, Craig, thanks so much for joining us for that quick take on the global markets. Appreciate it. Global markets sort of closing off the year, and as we've been saying, all the forecasts coming in, at least for the global economy for 2018, have been positive. Just make a quick note of the currency markets as well, and bringing the conversation back home to the Indian rupee. The Indian rupee has been trading at near about 2-month highs, and just on that note, if you take a look at a slightly longer-term chart on the Indian rupee, it looks like the rupee is set to gain on an annual calendar year basis for the first time since about 2009. That chart is showing you the annual changes, calendar year Jan to December, over a period of time. So the last time you saw the rupee appreciate was in 2009. Since then, you had a depreciating bias continue for various reasons, which we're not going to go into because they are well known. This year, it looks like, unless something changes dramatically, we will see an appreciation in the Indian currency. We've had a number of supporting factors. The biggest of them have been fund flows. You've got 2 lakh crore in equity plus debt flows this year already. 2014 was a better year. You had 2.5 lakh crore, but at 2 lakh crore, it's been a very strong year in terms of fund flows. Plus, of course, the dollar has not played truant in the rupee. Whether it's a good thing or a bad thing is debatable, of course, but just a small data point there, Harsha.
Interesting trajectory of the rupee through the year. Okay, let's move on now. With vehicles shifting to cleaner sources of energy, conventional fuel like petrol and diesel may eventually see a drop in demand. But what stands to gain, at least in India, is the city and natural gas distribution companies who've been increasing their presence across Tier 1 and Tier 2 cities. And while retail prices have been rising over the past few quarters, it is still much cheaper than diesel prices, which only works to its advantage. Samit Sarkar has put together a list of possible triggers that will boost CNG demand. Samit.
So I'll start off with comparing CNG with the conventional fuels. Now, if you see on an average, if a petrol car runs around 100 kilometers in Delhi with an average of around 15 kilometer per liter, it would cost someone around 460 rupees. A diesel car with an average of 19 kilometers would cost someone 300 rupees. But a CNG car would give an average of around 21 kilometers per kg and would cost just 190, which means that the CNG cars are 59% cheaper when compared to petrol and 41% cheaper when compared to diesel car. Now, when you see when you move on to household usage, a PNG cost per unit in Delhi is around 25.9 rupees, which is around 50% cheaper when you compare it to the non-subsidized LPG rate, per unit rate of a non-subsidized LPG cylinder weighing 14.2 kg in Delhi, and it is around 26% cheaper if you compare the same rate with a subsidized LPG cylinder in Delhi, which weighs around 14.2 kg. The second reason is cleaner fuel. Now, natural gas is cleaner and less polluting when compared to a conventional fuels, and that is the reason why government has been pushing towards the use of natural gas. Now, Delhi government has mandated this public transport to work only on CNGs, and other state governments also mandating this rule would indirectly increase the demand for CNG gas. Now, third reason is BS6 coming in. Now, if BS6 norms come in, according to a Motilal Oswal report, the petrol and CNG vehicle would increase by around 20 to 30,000 rupees, while that of diesel passenger vehicle cars would increase by around 75,000 to 1 lakh rupees. Now, this price hike would indirectly make CNG cars more cost efficient. Now comes in GST. Now, post GST implementation, city gas distribution companies were unable to get the input tax credit, because of which their costs had increased. Now, this increase in cost they had passed on to the consumers, thereby increasing the cost of CNG. Now, if natural gas is bought under the ambit of GST, the retail prices would indirectly go down and make CNG more cost efficient. Lastly, expansion opportunities that the city gas distribution companies have. Now, Niti Aayog is aiming to bring around 326 cities under city gas distribution by 2022. Currently, there are 87 cities, and the Petroleum and Natural Gas Regulatory Board has opened bids for around 223 cities, thereby increasing the expansion opportunities for the city gas distribution companies.
All right, thanks so much for that, Samit. It's day 2 of the Global Entrepreneurship Summit, and the focus has been on the central theme of encouraging women entrepreneurs. Tamanna Inamdar has been covering the event in Hyderabad, and she's spoken to some of the big voices at the summit. She sends us this report.
Day 2 of the Global Entrepreneurship Summit has basically saying people get down to business once the VVIP visits are done. There was a session this morning with Ivanka Trump, Sherry Blair and Chanda Kochhar, among other speakers, talking about the challenges that women entrepreneurs face, especially while looking for funding, and also advising women who want to start their own businesses on how to craft their pitch and how to move forward. So apart from all of these discussions, there have been a lot of huddles, breakout sessions where entrepreneurs are meeting possible investors. But what does GES achieve at the end of the day? Well, I had an opportunity to speak to some of the participants and some of the big names attending the summit about this. Listen in.
The truth is that in India you have many, many talented women, and yet you're not using them within your workforce. So only 27% of women over the age of 15 here in India actually are engaged actively in the economy. So that's a huge waste of resources. And even more interestingly, 67% of female graduates do not go into the workforce after graduation. So a lot of money has been invested into their education, and yet it is not then manifesting itself in your economy. So more needs definitely to be done. And why is that? Well, we say that there's three things really. One is societal assumptions about what is appropriate for women to do. I think this is about whether women go into the workforce at all, but I also think when it comes to entrepreneurship, it's also about feeling that entrepreneurship is too risky, that it's too risky for a woman. And many of the women entrepreneurs we've worked with who told me their stories have said that their parents wanted them to go into much more steady government-type jobs. And some of them, in fact, didn't tell their parents that they'd given up such jobs in order to start as an entrepreneur until their business was already up and running and being successful, simply because they were worried that their parents would be disappointed.
You know, ma'am, when you speak about women in the workforce, perhaps in India or urban India, there is more acceptance about women going into the workforce, but there is now a situation where a woman is supposed to handle all of the work and all of the work at home. You described some stories during your session. And is that fair as well? Because you're doing the double shift.
It's not only unfair, it's actually impossible. And, you know, you cannot expect in today's world for women to both be economically active and shoulder the entire burden of the caring responsibilities of the family. And one of the good things is, and I speak as a mother of 3 sons and 1 daughter, and my 2 boys are now both in their early 30s, is that they themselves also want to have a share in the caring responsibilities as well. I've got a grandchild now who's a year old, and my son wants to be involved in the upbringing of his children. I think that's not just people in Western Europe. I think that also the younger Indian men are starting to realize that they're missing out on part of their personalities if they're not engaged.
About 150 countries here. Almost 54% of our registered participants are women. 10 countries have all women entrepreneurs here, and it's just amazing to see so many women here, and investors are interacting with them. And my personal view is that we need to follow a conscious policy of providing greater impetus to women entrepreneurship. We need to ensure that they get the right kind of funding, and therefore when investors, when a lot of VCs, all of them interact with them and they have great ideas, they will all get funded. So I'm seeing a lot of women entrepreneurs here. They're all just full of great. We've put walls in our virtual exhibition. We've put walls of women entrepreneurship. We're just trying to promote and support all great women entrepreneurs. They have to come up with great business ideas, and all of them will get supported. They'll all get financed.
Okay. At the end of it, would there be a concrete takeaway to push women entrepreneurs?
Well, we've done everything possible for startups. We've created the right ecosystem. When we started the startup movement, all our startups used to go to Silicon Valley or to go to Singapore. Now Silicon Valley startups are relocating to India because of the ecosystem we have created, including a tax holiday for 3 out of 7 years, including a fund of funds which supports them. Many, many initiatives we have taken. And the key is really the ecosystem for innovation, for startup, for allowing quicker exit through bankruptcy laws, etc. So we made a huge number of structural changes to promote young Indians to become great job creators rather than job seekers. And I think the key is that now, I was talking to the director IIT Mumbai, and he said 40% of the students who passed out last year either did their own startup or started their own startup. So it's mind-boggling what's happening in India.
As far as entrepreneurship in India is concerned, a lot is changing because, India is no longer just a manufacturing or a services economy. Actually, as, the value chains get created, whether across fintech, across e-commerce, across, various other fields, that's giving opportunity to more and more people to start their own ventures. And this is where women find their niches and become entrepreneurs. I think as far as the enabling environment is concerned, yes, access to credit is one of the very important things. But again, if you see, a whole lot of schemes that the government has started about Stand Up India, Mudra, where there is a special focus on lending to women in the micro form. I think that is, picking up, and banks are also participating in that in a big way. The entire self-help group movement, that is one of the biggest movement in the world exists in India, where even we as a bank really lend to the self-help groups and also give them skill training, credit linkage and market linkage, through which many of them are becoming entrepreneurs. And then if you look at the private equity players participating in India, in the last 3 years, the number of private equity players have increased more than 40%. And most of them did not even exist earlier in India. So they're new players coming in. They are actually funding the new startups. So I think a lot has been happening around the ecosystem.
Do you need a separate fund focusing on women entrepreneurs?
Well, there are also some funds who focus just on women entrepreneurs, but I think, what is important is the entire entrepreneur ecosystem to further grow and develop, which, as I said, is growing. Even the whole thing about ease of doing business and the movement that India has seen is actually about making life easier for entrepreneurs. So, I think there is a lot that's happening, and some funds are focusing only on women entrepreneurs as well.
That's all the action from the Global Entrepreneurship Summit in Hyderabad. You can catch more of that on BloombergQuint.com. Out of time. Thanks for watching.
Good luck.
Are we live?